The time has come to start the meeting for media on the third quarter for fiscal 2018 earnings for Hitachi Limited. I would like to introduce the speakers to you first. In the middle is Mitsuaki Nishiyama, Senior Vice President and Executive Officer, CFO. Tomomi Kato, General Manager of the Financial Strategy Division. And to the left, Yasuo Hirano, Executive General Manager, Corporate Brand and Communications Divisions. Now, I would like to ask Mr. Nishiyama to start the explanation. I would like to refer to the slides. First of all, page 5 should be referred to. In the middle, we have the third quarter year-to-date numbers. At the very top, the revenues was 6,782.9 billion yen. That is up 8.9 billion yen year-on-year, or 1.2%. And next is adjusted operating income ratio, or income is 534.5 billion yen, and that is increased by 59.9 billion yen. Year-on-year EBIT 305.4 billion yen. Decline of 167.3 billion yen year-over-year. This is because of the impairment of the Horizon project included in this line. As a result, the net income attributable to Hitachi Limited stockholders was 82.6 billion yen, minus 175.9 billion yen year-over-year. In terms of the revenues, increase by 2% was achieved. And information technology, railways, as well as construction machinery have seen growth. And in terms of operating income, there was increase by 59.9 billion yen. As semiconductors, as well as the smartphones, automotive industry was declined in terms of functional systems, as well as automotive systems were subject to decline. But in terms of information and telecommunication system, as well as social infrastructure industrial systems, have improved profitability. Construction machinery's revenue increase has led to the improvement in the operating income. In terms of operating income on adjusted basis, we have achieved the highest level ever. In the past, it used to be 217 was the highest level, but we have been able to establish a new record. Next is 1-3. I would like to talk about the factors affecting changes in revenues and adjusted operating income. Left-hand side is revenues. Hitachi Kokusai Electric reorganization had an impact to the tune of 120 billion yen decline. Foreign exchange impact 27 billion yen. These are the deterioration impact. US dollar and Hitachi construction machinery, as well as the emerging countries, foreign exchange was subject to yen increase, higher yen for smart life and ecosystems. And that means that 4% increase was achieved and looking at the operating income, there was impact of reorganization. Hitachi Kokusai Electric minus 16 billion yen, foreign exchange minus 4.5 billion yen. If we exclude this, profitability improvement of 80.4 billion yen was achieved, or 18% increase year-over-year was achieved. And please refer to the next page. This is looking at the Horizon impact of the operating income. We have looked at the other components leading to the net income attributable to Hitachi Limited stockholders. There was also income tax as well as corporate tax as well. But the most significant impact was the impairment loss of the project suspension of Horizon project to the tune of 277.2 billion yen, which was posted in the third quarter. Left-hand bottom table shows more details. Impairment loss was 277.2 billion yen posted in the third quarter. For this amount, there is no cash flow impact. And for the fourth quarter, there will be other expenses related to this project relating to cancellation of the contract, as well as one-off expense which will be posted in the fourth quarter to the tune of 21 billion yen. There will be cash outflow in this regard in the fourth quarter, as well as partially in the first quarter. This 21 billion will be posted and it will be subject to cash outflow. Now, regarding 277.2 billion yen, the impairment loss is not taken into account for taxable income. Therefore, deferred tax asset is not recognized. There will be no tax effect. And please refer to 1-5. This is looking at the overseas as well and outside Japan. Please look at for the Japan is 1%, overseas increased by 2%. And in terms of regions, China was at 99%, and China is slowing down in that regard. And next, please look at cash flow. At the very top is 9.693.4 trillion yen is the balance sheet as of asset for December 31st, 2018. This is a decline of 413.1 billion yen. This includes the amount for Horizon as well. And CCC is the third line from the bottom, 70.9 days. And we will aim for 70 days by the year end. And the total Hitachi stockholders' equity ratio is 32.4%. The ratio is 0.31 times. We have made a significant impairment. However, the financial soundness remains intact. And cash flow is 202.3 and IEP cash inflow has fallen off, and there is also working capital increase from construction machinery and declined by 270.8 billion yen. In terms of cash flows from investing activities, is minus 175.4 billion yen, and the investment has the previous year has fallen off. Geology Train West stake has been sold, and also the shareholdings have also been included here, and therefore, as a result, free cash flow was 26.8 billion yen. Now, 1-7 and 8 are by segment. At the very top, we have information telecommunication systems, a 3% increase in terms of revenues. And Alexa Networks stock transfer was made. And as a result, impact is reflected. But in terms of system integration, business has expanded, and as a result, increase of 3% year-over-year. And in terms of operating income, increased by 38.7 billion yen, profitability improvement in system integration business, as well as profitability improvement in the IT platforms and products. In addition, there was also some real estate disposal as well, and therefore EBIT increased by 60.5 billion yen year-over-year. And next is social infrastructure and industrial systems. Railway systems, Europe revenue has increased, and Cell Air acquisition has led to the increased revenues of industrial products, increased by 5%. Adjusted operating income as a result of railway system business revenue increase and profitability improvement in industry and distribution field, and increase in revenues and profitability improvement in industrial product business has led to the increase by 34.2 billion yen. EBIT, on the other hand, is minus 153.7 billion yen, and a decline by 211.2 billion year-over-year. The Agility Trains West stocks gains was posted, but there was impairment loss due to the suspension of the Horizon project. And because of this amount, the impact has been shown. The impairment was 278 billion yen. 1-8 should be referred to electronic systems and equipment. There was a decline in revenues as well as income. 91% was the revenue level. This is because of the Kokusai Electric impact. And if we exclude this, it's 108%. Hitachi High Technology, the semiconductor products did well in terms of sales, and in terms of healthcare, the radiation therapy systems saw sales increase. Therefore, in reality, there was an increase in revenues. Now, the adjusted income, operating income was minus 0.7 billion yen. But if we exclude Hitachi Kokusai Electric, there was an increase in revenue. Hitachi High Technologies and Hitachi Healthcare business sales increased and pushed up the profit. And next is construction machinery, increased by 9% in terms of revenues in Asia Pacific as well as Australia. North America saw strong sales, and operating income increased by 19 billion yen year-over-year. However, in terms of EBIT, it's only half of the increase in revenues. This is because of the posting of the exchange loss as well as posting of structural reform expenses. Next, 1-9, high functional materials and components. Hitachi Chemicals, Hitachi Metals acquisitions have increased the revenues, and there was also an increase of sales price linked to higher raw material prices at Hitachi Metals. Increased by 5% year-over-year was achieved. But in terms of operating income, minus 11.1 billion yen. This is because of the change of product mix and increase in raw material prices at Hitachi Chemicals, and a decrease in demand for materials for FA, semiconductors and electronic products at Hitachi Metals. Automotive system at 98% year-over-year. This is because sales decreased in China and North America. Also, Clarion revenues have declined. In terms of operating income, minus 14.7 billion yen year-over-year. In terms of EBIT for third quarter, operating income declined, and there was impairment of fixed assets. There was also structural reform expenses posted. As a result, a decline of 46.6 billion yen in EBIT year-over-year. Next, Smart Life and Eco-Friendly Systems. At the 88% level year-over-year. This is because of a change of accounting to net basis revenue for a part of procured products in Japan. There was also a decrease in sales overseas, mainly in Middle East market, and price decline of home appliance products in Japan. As a result, operating income declined by 5.8 billion yen. And this is an increase in raw material price as well as impact of foreign exchange, as well as a price decline of home appliances in Japan have been reflected in the lower operating income. In terms of corporate items and eliminations, 37.2 billion EBIT increase has been posted. This includes the gains by selling Hitachi Kokusai Electric stock.
スライド1の11トピックスであります。
Slide 1-11 topics. First line, Lumada business revenues in total came to 757 billion yen, up 12% year-on-year. For the forecast for the full year, earlier we said it's 1,080 billion, but we are expecting 10 billion yen more. And year-on-year increase is expected to be 7%. In the third quarter, in order to expand Lumada Solutions, we are collaborating with Suntory Beverage and Food. a production planning system utilizing AI. We're supporting the client for a stable product supply and improvement of workflow efficiency. And with Tokyo Marine and Ichido, we have started collaborative creation to promote digitization of manufacturing sites. And we are providing a new service combining the predictive maintenance service and insurance utilizing Lumada solution. As part of the expansion of global co-creation initiatives, the largest state-owned commercial bank in India, State Bank of India, we're working with them to establish a joint venture. Their branch network, combined with Hitachi's digital technology, can provide for a digital payment platform that will enable better convenience and quality for India. Moving on to the next slide, 1-12. For other topics, one of such topics is, as you all know, we're looking to strengthen Hitachi's energy solutions business. We have decided to acquire ABB's power grids business. In the early half of 2020, we are planning to set up a joint venture with them. We're going to acquire a global customer base and build an energy platform. Next, regards structural reform of automotive systems business. We are responding to tender offer conducted by Faurecia for the shares of Clarion. We're going to deconsolidate at the end of March. And we have also decided to transfer the shares of Hitachi Automotive Systems Measurement and transfer commercial vehicle steering business to Knorr Bremse AG, a German company. And the closing is scheduled on March 1st. Automotive lithium battery business in this area, we're going to transfer a part of shares of Hitachi Vehicle Energy to INCJ by the end of March. With respect to railway systems business, we sold part of shares of Agility Trains West Limited. We have also acquired the remaining shares of Ansalo STS, and as of January 30th, we made it a wholly owned subsidiary so that we can increase synergies further. If you could please turn to slide 2-1. Outlook for fiscal year 2018 for the full year. Revenue and adjusted operating income have remained unchanged since the last report. Revenue 9.4 trillion, adjusted operating income 750 billion, up 8% year-on-year. EBIT 500 billion. We're going to post the sales proceeds from various business sales. We now have an idea as to what can be posted by the end of March, so we have added 50 billion as a result. Net income. The last forecast was 100 billion, but now it's been revised upward by 80 billion to 180 billion. Just for your reference, there are two columns to the far right. Impact from the suspension of Horizon project in terms of EBIT, 298 billion. In terms of net income, 294 billion. Excluding these, the income is 474 billion, but 294 billion of Horizon is reflected. And that's the number. Now, by segment, just to highlight the changes made, slide 2-2 and 2-3, Information and Telecom Systems, plus 7 billion on top of the last forecast upward revision. Social Infrastructure and Industrial Systems, plus 10 billion. Now, high functional materials and components, on the other hand, downward revision or decline by 30 billion from the last forecast. Automotive systems, downward revision, 12 billion. Smart Life and Eco-Friendly Systems, a revision downward of 4 billion. Others, plus 7 billion. Corporate items and eliminations, plus 22 billion. So the risk that we talked about earlier, 20 billion, is reflected in these numbers. So that concludes my presentation. Thank you.
それでは質疑応答に移らさ
We would now like to take questions. The floor is open. Thank you very much. Question. I have 2 questions. Just now, 80 billion upward revision has increased. Why is this the case? Please elaborate further. Answer. For Horizon, on the 17th of January, I talked about impairment of 300 billion was included, and from 400 billion was the forecast, and subtract by 300 billion, leading to 100 billion yen. And in 1-12, I talked about topics in the automotive systems business. There have been businesses that have been sold. Clarion was already included in the forecast. However, and Clarion is 65 billion will be the proceeds that has already been reflected in the original forecast. And next one, the third one, Hitachi Automotive Systems Management, and the commercial vehicle steering business, and the Hitachi Vehicle Energy transfer. With these 3 business transfer, it amounted to 30 billion. At the time of 17th of January, it has not been reflected because the closing was still unclear at that time. It was not included at that time. So in addition to this, Agility Trains West, and this also was finalized after the announcement made last time. Therefore, these have been factored in. Furthermore, structural reform expenses were subject to review. As a result, although we mentioned 1 billion, but now we have taken into consideration other business transfers, so made a revision from 1 billion to 180 billion. Question regarding Agility Trains West, how much was this sold for? Answer, we are not announcing, disclosing such information. Question regarding China, and it's 99% slowing down in terms of market. Which products are subject to decline or slow down? And GDP have been slowing down for China. Inclusive of the forecast going forward, please elaborate. Answer, for China, our main business is construction machinery in that region, as well as elevator business. However, up until the 3rd quarter, they remained relatively strong, but elevator was subject. And for construction machinery, there was decline, and automotive systems, the decline in this business was very significant. So there was decline in terms of segments. Automotive systems, the revenues have declined in this market. So there was decline in automotive systems as well as construction machinery. For construction machinery, on a year-to-date basis, we have provided numbers, but for 3rd quarter alone, there has been a decline. Question, what is the forecast outlook going forward? Answer, this is difficult to elaborate because in terms of elevators, in terms of number of units, units remain strong. It is increasing, although the price is declining. Therefore, total revenues is likely to increase on a full year basis. That is our forecast. For the fourth quarter, we believe that it will continue on the increasing trend. But in terms of construction machinery, it is likely to decline. Automotive systems, on the other hand, for China, the third quarter trend is likely to continue.
Any other questions? Question. I have a question regarding your Lumada business. The full-year forecast has been revised upward by 10 billion yen. It's an addition to the core business. So in which areas are there likely to be increases next fiscal year and onward? How are you going to continue to drive Lumada business? It's going to be key. So what are your ideas? Lumada core business, as you rightly said, is very crucial. For one thing, solution core business is increasing, and the actual revenue is rising in industrial areas, especially factory automation, efficiency improvement, quality improvement in factories and plants. Such applications are increasing in number. And those areas related to fintech and financial services, AI is being applied. So such applications are also increasing by segment. Roughly speaking, information and telecom systems 80%, and the remainder industrial systems. In terms of information and telecom systems, industrial as well as financial services applications are increasing, and industrial systems as well. And railway systems, predictive maintenance and diagnostics, for such purpose, Lumada is being applied. And we believe that this trend will continue. Given the overall macroeconomic environment, investment into hardware, we're not sure of the prospects, but in terms of efficiency enhancement, of quality improvement in industrial areas and financial services and public services, in those areas, energy saving, labor saving, or creation of new services. These areas are expected to increase. Thank you.
でしょうか。じゃあこの真ん中の
A question. I have two questions. Now, 750 billion is the forecast for your profit, but it has not changed. But Mr. Higashihara, when he had the meeting on Horizon Project, he said that 8% of operating profit margin should be achieved without fail. And I understand he is committed to achieving this. But by segments, there are ups and downs. And therefore, once again, please talk about your outlook for achieving this number. Answer. Yes, there are ups and downs. The situation is mixed. For high functional materials and components and automotive systems, for these segments, business environment is not favorable. And also there are challenges that must be overcome. There are challenges that will take time, although there might be challenges that can be overcome in the short term. So the situation is mixed, and the difficult situation is likely to continue going forward. And the forecast is reflecting these factors. But on the other hand, for information telecommunication systems, the IT platform storage and cost reduction has been achieved. New models has been introduced to the market according to schedule. We are making progress. Therefore, this business remains strong. Project management is conducted in a steadfast manner. And therefore, this business remains very strong for us. For the social infrastructure and industrial systems, the building system. In terms of the sales price, especially in China, it is subject to decline. But the scale of decline is decreasing, and the cost reduction is being achieved. And raw material cost increase has been absorbed by cost reduction efforts. And in terms of industrial and distribution area, project management is successful, and railway systems remain very strong for us. Therefore, in terms of social infrastructure industrial systems, we believe that the trend is strong. For construction machinery, on the other hand, for Hitachi construction machinery has assumed 100, but we are looking at 105 for the fourth quarter. So it has been adjusted accordingly. But excluding China, the business remains strong. Furthermore, the emerging currency foreign exchange is having an impact as well. It is very difficult to forecast the trend in this area. Therefore, on the part of Hitachi construction machinery, as well as on the part of Hitachi, we are taking a conservative outlook. Furthermore, in terms of automotive system, the difficult situation is likely to continue. This has been reflected accordingly. Smart life and eco-friendly systems for home appliances sales are declining in the Middle East, leading to a revenue decline, which is being reflected in the numbers accordingly. Question 2. It is going to overlap with what you have already responded to. Next fiscal year and beyond, if the current difficult environment continues for the automotive system, as well as the high functional materials and components are likely to be difficult. And based on that, in order to secure the high income level, what is necessary in terms of measures? What are you implementing today? Operating income, highest record, is that a viable objective for you to achieve? Answer. Regarding the outlook for 2019, the macroeconomic uncertainty must be considered, and in terms of smartphones as well as FA areas, automotive systems, in the industries, the demand outlook remains difficult. We are compelled to have a very conservative outlook in that regard, and in terms of high functional materials and components as well as automotive systems, the assumptions must remain severe. But on the other hand, for the social innovation business as well as information telecommunication systems and infrastructure industrial systems, Lumada's business as well as industrial areas, the digital solutions business are areas that we hope to expand going forward. Lumada-related business trend shows that we can have high expectations in this area, but we must achieve a higher level of profitability, which is akin to global competitors in terms of revenues as well as income. In order to do this, we'll have to make investment for business development as well as R&D. Investment for growth will be required. We will make proactive investments in that regard. However, in terms of operations, improvement thereof, and cost reduction in fiscal year 2018, the steel materials were subject to increasing cost, and we made progress in terms of cost reduction to absorb this increase. We will continue with this initiative without slowing down. And furthermore, utilizing digital technologies, operation improvement as well as quality. losses from related to quality should be reduced. So operation will continue to be improved. Improve cost structure and enhance profitability. That is what we intend to do. And the 2021 midterm management plan is what we are formulating today in the mid to long-term strategy. And the numbers will be formulated and it will be shared with you in April.
Question. I have two questions I would like to ask. Question number one, with respect to Horizon project, in the third and the fourth quarters, you're going to post an impairment loss of 300 billion. I understand that. But Horizon is not going to be dismantled as a project. You will keep some of the staff to continue with part of the activities. Next year and onward, what are the expenses expected for Horizon? You're going to suspend the project, but if you are to make a decision for withdrawal, are there contractual penalties that you may have to pay? Answer. The expenditure going forward as a one-off expense, we're going to book it in the fourth quarter. 21 billion, that is what we are expecting to post in the fourth quarter. In terms of cash out, that is the amount. So fourth quarter this fiscal year, 13 billion, 8 billion in fiscal year 2019. In terms of PL, 21.6 billion, the full amount is to be posted in the fourth quarter. We will not start production right away. In order to conserve the site, Horizon as a company will remain. And of course, maintenance cost will be involved, but it's going to be minimal. And if there are any contractual penalties, they will have to be booked there. Beyond that, assets are limited. Land is about the only thing, and the cash that will be necessary going forward. So those will be the assets, which are pretty limited. So there's no risk of additional impairment loss. Question. Does that mean that because of contractual violations in other areas or in terms of running costs, you're not expecting any further cost increase? Answer, no, we're not expecting anything more. My second question. With respect to automotive systems, there are problems with parts supply to Subaru. Is that going to have a negative impact on your performance? Answer. Automotive systems, we are in the position of being a supplier to Subaru. So we cannot make any comments on this given our position. I would like to refrain from making comments. Question. So you're not going to post anything in the third quarter or the fourth quarter? Answer. We're not planning to post anything from that.
Question. Regarding the automotive system business, I would like to ask further questions. In terms of operating income margin, 8% is hard to achieve, but you are selling business this fiscal year. With this, do you think that profit margin will improve? The business environment remains very difficult in this area. What kind of initiatives are you contemplating to improve the situation? Now, another question is the impact of U.S. and China trade war, as well as Brexit. It is in a flux. Now, what will be the impact on your business? Answer. Regarding automotive system strategy, currently in the third quarter and in the fourth quarter, non-core business will be sold, and we have decided for the 4 businesses. This is a selection and focus in terms of automotive system business. And when you talk about focus, motors and inverters will be very important businesses, as well as autonomous driving will be an important focus for us. We are not going to take a scattergun approach, but rather select the business that we will focus on, so that we will make sure that we can secure position in the global market, and that is what we are proceeding with, and the decisions have been made this time accordingly. In terms of operational improvements, we are reviewing all types of costs in terms of procurement, as well as other costs. They have been identified so that we can further reduce costs. In terms of profit margin, the impact of these measures have already come to the fore. In terms of operation improvement, as well as selection and focus, will be important for us to improve the profitability. We hope that the performance will be enhanced. And in terms of the mid to long term, we will leverage our strength so that the global position can be secured, and we will select such businesses to allocate our resources to. Now, regarding the trade war between the U.S. and China, this is very difficult because there will be some products that will be directly impacted, but the direct impact is not very significant in terms of value. But as already explained in the past, the overall economic environment could slow down in countries in the world. We have to watch this trend very carefully. Regarding Brexit, on the other hand, the businesses is in the UK is the flagship business of rolling stock, and in the UK, in the order backlog is very significant, the revenue is very significant, and we are concerned about the procurement cost if there is to be a hard Brexit. But so far, in the UK, we are trying to set up an organization where we will have a closed loop in the UK, and 70% of the products that we procure are procured within the UK. Therefore, the impact is limited. In terms of dealing with the business, we have the plants in the UK as well as in Italy. Therefore, we can utilize these plants for flexible dealing with the situation.
Any further question? Question. First, regarding Brexit, 70% procurement rate, is it to be raised in the future, or will you keep 70% flat? Answer. To the extent possible, we would like to raise the ratio of procurement that we can achieve within the UK. So what can be sold in the UK, we would like to increase the procurement of parts and components in the UK. We're not sure how much increase we can achieve. I don't think we can achieve 100%. Question about China. So decline in your automotive systems business. If you could be a little more specific. The number of elevators sold is increased, but then on the other hand, automotive systems are down. That's because of the sales decrease or economic conditions locally. And so I think there are both. The sales trends vis-a-vis the customers that we supply to, they're down. And overall, the sales or revenue is also declining. There are both factors. Question, with respect to Lumada, SI business for Lumada, 98%, 760 billion for the full year, so decline of 2%. Has it been the same from the initial forecast? I wonder why. Answer, in terms of the trend, Lumada SI business, a part of the business is about Lumada being set up from scratch. So, solution core business, that part is increasing. So a part of SI business is being replaced by core business. Therefore, SI business is expected to decline slightly. But over the medium to long term, Lumada core business will be the leader, and Lumada SI business is also to be increased. That is our outlook. Thank you.
の一言だけ。じゃあこちらの前。
This will be the last question. Question. I have two questions. Regarding the automotive business, for next fiscal year, structural reforms is likely to have run its course in this fiscal year, so there will be not significant structural reform, but it will be subject to high volatility. But what about other businesses? In terms of structural reform, will there be a need to implement such measures in the next fiscal year? Second question. Can I continue with the second question? A release has been made regarding the strengthening of the organization. Why did you make this change? What were the challenges you were facing compelling you to make this change? Answer. Regarding structural reform, AMS, the selling of the business is a part of structural reform efforts. And therefore, it's a selection and focus strategy-based initiatives were implemented, and therefore, further structural reform will be necessary going forward to reduce cost, as well as in terms of products, as well as changing the product portfolio, so that we can leverage our strength, and that will be the core business for us. So in that regard, we will continue reorganization as well as structural reform. It's not just limited to AMS, but regarding other businesses, there will be structural reform as well as reorganization that will be required, and we will implement that in a steadfast manner. In all of the segments, we will continue to make such efforts in all the segments. The withdrawal in terms of products or selling on the business have been conducted in the past, and we shall continue with this without exceptions. Based on the next midterm management plan, necessary measures will be implemented, and it will be considered accordingly. Now, to your second question regarding the business structure. For one, what we are trying to achieve is to become a global leader in social innovation under the 2021 midterm management plan. So we will be focused in such a solution business. And in order to strengthen these business areas, we have reorganized. We have identified 5 areas of growth. In the past, there used to be 4. But now we have reorganized to mobility solution, human life solution, industry solution, energy solution, and the IT solution. 5 areas have been identified so that we can allocate more resources for generating new values. And we will aim to become the global leader in each of these fields. Mr. Fukui, Vice President, will be in charge of overseeing these 5 areas. In the past, investments were made based on business units. And that was the prevailing trend. But now we will be looking at such initiatives in terms of clusters, so that optimized investment as well as optimized resource allocation can be made. And above BU, the executive vice presidents will be in charge of these different areas, and under the president. By so doing, we will accelerate the social innovation business. So under these executive vice presidents in each field. And overall, the social innovation business will be accelerated. The other point to be made is diversity to generate innovation. There will be more diversity and focus in terms of non-Japanese executives as well as persons from outside of the Hitachi Group. Based on this perspective, allocation have been made. Thank you. With this, I would like to bring this meeting to a close. Thank you very much for your attendance.